Thanks for staying tuned. And the IMF sees the strong performance of agriculture and services, particularly tourism, growing Tunisia's economy to 2.7% this year from 2.6% in 2018. However, the IMF says that economic activity continues to suffer from elevated political and economic uncertainty, as well as structural bottlenecks, such as inadequate access to finance. According to the fund, elevated macroeconomic vulnerability still threaten economic stability, and growth remains insufficient to make a dent in unemployment, which is high, especially for the youth and women. Tunisia's large and growing external and public debts give rise to large financing needs and represent a strong burden for future generations. We now cross over to the Nigerian equities market for update from my colleague there, Temple Ashaju. Hello, Temple. Well, first of all, may I ask, is the market following the development at the spring meeting going on in Washington? Hello, Temple. If you could hear me, I was asking if the market is following the development at the spring meeting going on in Washington.
Well, I think the market is rather following some domestic issues and, of course, reacting to all of those developments we're seeing around the markets here. The fact that there's a whole lot of uncertainty around the economy here. There is basically no news, no catalyst to push up equities performance right now. And so you're seeing a lot of FPIs selling down here, trying to move more into the debt market, where you have yields now moderating around some 14.50%. That's what we're saying, because if you take a look at what has been happening at the investors and exporters windows of the FX market, we've seen some $7.8 billion worth of inflows into the Nigerian market so far this year. But a larger percentage of those amounts of money have actually gone into treasury bills and a bit of bond. More of them have gone into treasury bills. In terms of the bonds, we've seen some growth of some 91 basis points up until what we had yesterday. So that is basically what we're saying. If you take a look at how does the equities market specifically has been reacting to all of this, it's been very, very negative. Year to date, we're down some 7.3%, and post the election, which happened on the 23rd of February, we've seen the market down between then and now some 10.4% or thereabouts, which tells you that a lot of investors here, especially the foreign investors and of course the institutional investors, are reducing their holdings in equities. In fact, seriously selling down in equities and moving more into T-bills specifically. Well, we've seen cases of OMO auctions and primary market auctions. A few of them that we saw last week, but this week we haven't really seen any. So that is going to be keeping the market at a low. But given the announcement of some bonds calendar that the DMO has now come up with, we should also see some of these FPIs and institutional investors crossing over to the fixed income market, possibly from next week, except for the fact that we're going to be having a bit of a maturity on Thursday. So investors are also holding their fund and waiting to see how things will pan out. But in the equities market here again, we have the fact that prices are really low right now, and that makes it attractive for a lot of the domestic investors who are taking advantage of these low prices due to the technical valuations that they have done, and of course the fact that a lot of the companies around still have some good fundamentals, coupled with the fact that the economy still has some correlating fundamentals to that is making things looking attractive. So you have a bit of private investors, domestic investors, retail investors coming more into some of these names. But when you compare the volume of the transactions that these folks, these domestic folks will bring on board to what the FPIs will bring on board, it is really, really low. So that's why we're not really feeling the difference or feeling the impact of their inflow into the market, influx in the market. So let's keep fingers crossed. We'll see how things go now that we are seeing some close periods being announced by some of the companies. I mean, Zenith Bank announced yesterday, 9th of April, as its close period, and it means that by Tuesday, 16th of April next week, the board members will be sitting over an unaudited financial statement for Q1, and that is something, that's a bit of a news that some investors here in the market are currently reacting to, because as of yesterday, Zenith Bank is a company that traded at some 20 naira, but now it is trading close to 21 naira, and I think it is probably going to cross 21 naira at the end of the day. So the close period for the Q1 2019 earnings have been announced by a couple of companies. Ikeja Hotel is also announcing its own Q1 period. Nigerian Breweries has announced the 4th of April. And of course, UAC has also announced yesterday, 9th of April, as its own close period. So going forward, we'll see a whole lot of board members, directors sitting over unaudited financial statements of their company, reviewing the first quarter of the year. And that may just lead to some bonuses that may be declared, but it is really, really bleak right now to say that we will see bonuses or some kind of interim dividends coming. But anything can happen, because some companies have actually made some good money during the election and, of course, in the first quarter of the year due to some festivities that we've seen panned out in that period of the year, Chimezie.
Well, are you saying that perhaps the first quarter earnings that we're expecting will probably be a game changer for the market and, of course, change the narrative that we're seeing now?
Yeah, ostensibly it could be like that. I mean, anything can happen. The thing is, once the numbers of some of these companies are looking bright, looking good, it gives room for some investors to also take position in some of them. So Zenith Bank, for example, has actually done well within this period. It's a lot of the companies, a lot of the investors, these institutional investors have also put money down on some of the especially in the investment space, talking about treasury bills, talking about bonds, and of course the FX space. They've really made some money. If you look at the volume of transaction we've seen at the investors and exporters windows, I mean, the FX transactions that some of these banks would have also carried out in line with that could also translate to some kind of benefits for them. So at the end of the day, it could be something that will motivate some investors to come on board and also try to see how they can start taking position going forward, especially in the banking and the conglomerate, the consumer goods side of the market. A couple of the consumer goods are also doing commercial papers, and that gives them a little bit of a catalyst going forward. Then in Q2, we will expect the fiscal authorities to also make some announcements. You're expecting the budget to be passed. You're expecting the cabinet of the presidents to be released and all of that.
All right, Temple.
I mean, these are catalysts that are also likely to come in, coupled with the earnings we expect in Chimezie.
Okay, let's continue to keep our fingers crossed. Thank you, Temple. And finally, the South African unit of Japanese car maker Nissan plans to invest $213 million in the country to produce the new Navara model at a local plant. The managing director of Nissan in South Africa, Mike Whitefield, explains that the investment will increase production capacity by 300,000 and add 400 permanent jobs at the plant in the town of Roseling, close to Pretoria. And that's a wrap on the program. Thank you very much for watching. I'm Chimezie Obi Iwawu.